And good afternoon. Welcome into Market Talk for Monday, November 2nd, 2020. I am your host, Jesse Allen. Great to be here for our debut episode of the podcast. Today's show is brought to you by our friends at BOA Coolers. Folks, BOA Coolers, one of the coolest products I've ever had. It's lightweight, easy to carry. It's like a gym bag. All right. There's no more bulky, heavy, giant coolers that get in the way. BOA Coolers are changing the cooler game. All right, BOA coolers, perfect for kayaking. If you're going on a hike, maybe doing a little bit of golfing, possibly. Not so much in the winter time, depending on your location. But even out in the field, harvest, planting season, when you're working those long hours, you need to stay hydrated and more. They are perfect for anything. Check them out today. There are four awesome colors, and I know you'll absolutely love them. The lime green is my favorite. I've got two of them. They're awesome. Learn more and get yours today at boacoolers.com. That's BOA, BOA Coolers.com. You can tell them Jesse at Market Talk sent you. Our friends at BOA Coolers, BOACoolers.com. All right, our guest here on the program. It's kind of fitting that he is the first guest to join me on Market Talk. Pretty sure he was the first analyst I talked to in my radio days. He is senior market advisor with Total Farm Marketing by Stewart-Peterson. Bryan Doherty joins us here on Market Talk. Bryan, great to have you on, my friend.
Jesse, thank you. And yes, yeah, my friend. That's right. You are my friend. We've known each other a long time. We met in Kansas City. We've
Yeah,
done numerous shows and interviews, and it's been a pleasure to work with you.
yeah,
Pleasure
and
to
it's
be
great.
here.
Great
Yeah.
to have you in the fold on Market Talk here today. And Bryan, I'm not going to waste any time. Let's get into this. And I think the first thing I want to start with, just taking a look at the markets today, fairly quiet, beans down a little bit on Monday, but we also know there is a presidential election coming up tomorrow and a few other elections involved with that. And I want to start there. How much are the elections factoring into the markets here on Monday?
A great question. And maybe we go back to last week because the
Hmm.
markets didn't really move a lot today. But last week they moved a lot. We saw corn and soybean prices reaching into new highs last week or very close to new highs in corn. December corn came within maybe a half a cent of the contract high from June of or July of 2019. So long, long time ago. Um, and then they tipped over. And I think an election, like many other things, is I mean, we know one of two results likely. So we know something. Um, but it's still uncertain. And the market doesn't like some uncertainties. It likes some, like weather. If that's uncertain, people like to buy that. Things like elections, where you just don't know how this is going to pan out or how people are going to react. So, what we saw was actually a pretty good clip in the open interest, but maybe more so reflective in what we call the Commitment of Traders report. So, that's, as you probably know,
Hmm.
that's a report that's released each Friday through Tuesday. Big buildup long positions, and then each day, uh, private analysts try and build on that or take away from that. And so last Tuesday, some very large numbers. You're looking at corn, 276,000 on uh, Tuesday of last week, and soybeans at 232,000. And by this morning, the estimates were 220,000. So 56,000 contracts of corn shed. That to me is just reducing risk. Maybe reflective of farmers selling more corn too. We had a good price to sell, but the election, what's it look like in the big picture, Jesse? Hard to say. I would argue that the market has a known quantity with Trump, so if he gets back in, probably not a lot of change. With Biden, it's an unknown right now.
Hmm. Very good insight there, Bryan. And looking at here today, talk about corn a little bit. Let's focus on that market. Down just a little bit. Futures hovering right around that $4 mark. It seems to be kind of a popular spot lately. Weather in South America dry this week. You mentioned those larger than anticipated CFTC reports on Friday. Taking a look at this corn market, what are some of your thoughts and maybe some advice you have you can throw out there for producers who are looking to sell.
Yeah, corn's at a crossroads. On the one hand, you'll have those who argue that this rally was overdue and all of a sudden it came at once, and where it should have really started was maybe back in January, February. Well, then COVID hit and energy
Mhm.
price wars and uncertainty with ethanol usage. But lo and behold, what happens is we get into August, have really high rated crop, so the market's down on a good looking crop coming, but then some things started to happen. And so there's a little story behind the corn. So what happened? Of course, the big winds in Iowa, then the dry that was already developing exasperated itself further into August throughout much of the Midwest. So it turned the tide on the yield expectations, turned the tide on maybe total supply with the windstorm. But then you had some other things kind of creep into this, and that is you had China come in and really starting to buy a lot of stuff, both corn
Mhm.
and beans. And in fact, they have more corn sales on the books than the USDA is indicating that they'll import this year. So look for some updates and changes there. So the corn got a story, but probably the two biggest things that came into play, um, coupled with those other three elements there, a delayed South American planting for soybeans, because the second crop corn is the big export market for Brazil,
Mhm.
and when that gets delayed, it's 1 or 2 more weeks of additional U.S. exports, but it also puts that crop in a little bit more of a tenuous situation, just like when our crop is delayed. Doesn't mean it will be worth less. I mean, will yield less, but it's a little bit more of an uncertain. So you had that come along. You've had this strong technical buying, but the other element was that September stocks report really blew everybody's expectations out of the water. Stocks were tighter, really reflective of probably what basis was telling us in January and February, and actually throughout right prior to harvest too, in particular, that the low test weight corn from last year and maybe perhaps the overestimate of last year's crop. So you may have a crop that shrunk quite a bit, and that was reflective on. Think about that. That was reflective on September, about 250 million bushels
Yeah.
in a time window, Jesse, when ethanol usage was down and grind was down. So probably reflective of last year's smaller crop.
Sure. And I noticed, we have a little bit of this resistance at around the 401 mark on December. If I'm a producer, am I sitting kind of waiting to see if we can push through that or not?
Yeah, great point. I really didn't answer your last question. So we're at this crossroads. And so if you're behind on sales or if you've been waiting for more, the market gave you a signal last week. It had a larger weekly range than the
Mhm.
previous week. So some people like to look at daily charts. So I talked about a hook reversal, or I think I mentioned the prices reversed on Tuesday last week. That was a hook reversal. New highs
Mhm.
on the move, then closed lower. Didn't take out the previous day's low though. Last week, though, people who look at weekly charts, they look at last week and it goes, whoa, and they go, whoa, this is a signal. We had a higher high last week and a lower low than the previous week and a lower close. So my point is, if you're behind on sales or if you've been going gangbusters trying to get everything harvested, not paying attention, start paying attention, get current with where you want to be on sales. This is a rally that was not expected. It's come. All rallies are stressful because you never know when you should make a sale until it's way past the time. And any sale made prior to that feels like a mistake. So the emotion's there. But think about the price. Think about what it can do for you. And if you have the opportunity or knowledge or skill or advisor that can tell you, look, you don't have to own it in a bin. There's ways to retain ownership, fixed risk through call options or bull call spread or some kind of quantified risk that Jesse would get you out in time. You can get out to May or next June or September and just kind of be in front of the market. The South American weather is going to be absolutely the thing that either suggests maybe we've seen the high and we're going to drift down or we're going to blow this thing up.
Sure, sure. And always, as we always say, it's all about those break even points for your specific operation. So that's what it's really all about and what it comes down to. You mentioned weather, South America. Let's shift into soybeans. I think that's a good spot for us to pivot here. We've seen this impressive run up the last couple of months in the bean futures, down a little bit today. I know some good rains expected in South America in Mato Grosso region we saw those over the weekend, I should say. Talk about this bean market and some of the things, some of the signals you're seeing there, Brian.
Yeah, there's been a lot of talk that first of all, China has really, stepped up and bought a lot, and they have, and they front load, so they bought a lot of beans, and I think they even exasperated that when they saw this drier weather pattern developing in the southern hemisphere. Better to have the bird in hand than not. So that those elements are still there, but conditions have improved in South America. You talked about rains in Mato Grosso. These are things that will help the crop move along. And typically, we don't talk much weather in South America in October, early November. It's really about mid December when that weather really begins to matter. So, as we look at this chart right now, we've seen a market that's had a good run. It's corrected. By some accounts, you had a kind of a steep upward channel line, kind of slipped through that. Inversion in price. That means the front months are offering more than the back months. As a farmer, if the market's offering you more now, then if you're going to take the risk of storing, you probably want to take it. There again, I think farmers as a whole have been really aggressive selling their beans, and they got so busy selling beans to make room for corn, and they've been so busy harvesting corn, they haven't really thought much about corn marketing. But but to your point, you got around this 1050 support area in November. Probably better support. Let's just call it the $10 to 1050 range. Resistance at $11. There again, if you're holding a lot of inventory, really measure how much risk you want to take, and just remember how quickly prices evaporate and fall apart when they do.
Very, very true. And obviously, kind of looking at, you mentioned that that support point, that kind of that 1050 point in the future side. And basis varies across the country. We've always seen that variation. It seems, week after week. But soybeans, it's kind of one of those things where you mentioned everybody is kind of worried about soybeans, and now we got a lot of corn to look at. But obviously, beans something to take advantage of if you're still sitting on some, Brian.
Oh, for sure. Be technical and be strategic. Don't have a lot of regret. Sometimes when it boils down to making a decision, it's like, okay, I can do one of five things, which means I could do nothing. That's still a decision. I could sell everything. I could do a combination of things. I could forward
Mhm.
sell. I could buy some calls. I could do all of this. Whatever strategy you look at, think about the next step or two ahead of that. If you choose to do nothing, let's say kind of roll the dice and hold it all, well, that's fine if it goes up, big dividends. If it goes down, painful, and you feel terrible, or you might feel terrible.
Mhm.
So it's just important to really think in the marketing, and something I've done this 31 years, something that I find is really helpful to farmers is to just talk to somebody about it, talk to somebody knowledgeable about it, and see if you're missing something or should I be doing something different. A lot of times those conversations don't have anything specific in it, but by the time they end, you've got a very specific or strategic way to handle what your inventory is, or your product, your inventory, your crop, what's in the bin, and a balanced approach.
Brian, let's talk wheat real quick. I know KC wheat, kind of the winner of the day on Monday, up 11 and three quarter cents in that December contract. Highest percentage gain among grain contracts. There's some dry weather concerns for next year's winter wheat crops. Talk about this wheat market in general here, real quick.
You bet. Yeah. In general, wheat's been in a weather market, and if it hasn't been here at home, you look at the drought monitor maps. The entire western half of the United States is dry, and you continue to see that pattern develop. You've got talk of La Nina. You also have had this pattern in the Black Sea in Russia, and Russia's the largest exporter of wheat to the world. So you've got that. Then you got this COVID story. Well, is Russia going to kind of hang on to their inventories, or are countries going to hang on to their inventories? So you got this paradox where you've got world record projected carry out, and yet you have an uptrending market in general. Prices did seem to fall out of bed last week. Bullish key reversed up today, bigger range than Friday. Um, I think the story is probably more in the hard red winter just because of dry weather, and we saw that reflected today. But I wouldn't get overly greedy is not the right word, overly optimistic that wheat prices have a long way to go, not until we see some real evidence that the world supply is starting to trend backwards.
Sure, sure. Bryan Doherty, our guest here on Market Talk today. I'm your host, Jesse Allen. Brian, let's shift over to livestock. I want to start with cattle futures, kind of adjusting positions a little bit, it seems. There was that shift higher last week, and I know there's still a little bit of demand concerns on the beef side. We see, fed cattle around that 130 something mark, live cattle, the, low 100s. Talk about this cattle market here today. I know we were down just a little bit. What are some of the signs you're seeing in cattle right now?
Great question, because the signs is the key word. What signs are we seeing? Well, we did see a nice on the futures contracts
Hmm.
last week. On the 26th, we saw a nice, spike down, and then a decent close for the day, and then we saw that again on the 28th, and then we saw a big follow through the day after. So the signs we're seeing is you're starting to see the bottom pickers come in and try and buy value. And the concern, of course, is with COVID spiking that, what's that mean to the consumer? But we've kind of been here, done that before. And as long as it doesn't look like the packing plants are going to get stuffed with animals and backed up, the consumer at home is buying and cooking. Exports have been good this year. The bigger picture perspective, though, is that we need to realize that there's still ample supply. But when you look at the cattle market from let's call it a seasonal perspective,
Hmm.
got that pushed down into the fall, into October, and typically this is where we start to hold on and grind it higher, and start to talk more about weather and weight gain and those type of things. So I'm very cautiously optimistic. I
Hmm.
think I think the deferred months have it right. They're priced higher than the front months. I think we've got a good story in front of us for the cattle market.
Yeah, and you think about that. Obviously, we're moving out of that summer grilling season, so it's typically that seasonal push down, like push higher, I should say. Kind of just moving out of that high peak time. But it seems like, from what I'm seeing as well, I kind of echo your sentiments. Cautiously optimistic in this cattle market, Brian.
Yeah, I think that's a good way to summarize cattle. Corn, the feeders have been battling, the corn market.
Hmm.
So when feeders, you got corn going one direction, the feeder prices going the other, but that too looks like it's really turned the corner. Real strong upturn of $8 in the feeder cattle contracts over the last week and a half. It just looks like they've probably seen their bottom, and they're more typical to put a V bottom in. Where I would argue that live cattle market a little more of a saucer bottom into the fall, then grind higher, move higher into the peaking point sometime in that April window.
Sure. Let's move over to hogs. I think a little bit of a different story there. It seems like we're having trouble holding prices above that $65 mark right now, Brian. And I know, just looking at things, seems like a kind of a weak cash trend is there in the hog market today. We were a little bit mixed. What are you seeing in hogs right now?
Yeah, exactly what you're saying there. As far as like the cash index was down $1, but it's still a good premium to where cash prices are. But remember, or futures prices. But remember, when we look at the futures prices right now, the front month is now December. Well, that's 2 months off yet. So the futures market is reflecting the expectations for the cash market, and that expectation is for continued large supplies. We had cheap corn prices all the way through summer. The hog herd has is likely expanded. We're seeing big daily slaughter numbers. We can't get away from that upper fours, low 500,000 on the daily slaughter. So the export market has to pick it up. That's exports ebb and flow, demand ebbs and flows. I just think we're in a window here where the hog producer has just they produce ample inventory, and I don't know if they've let off that throttle. When things washed out like they did last spring, it kind of looked like they might. I
Hmm.
don't know if they have or not. So we kind of ran through our loophole here, or should be in our loophole, where through euthanasia and breeding practices, we have a little bit less inventory, but we get out on those deferred contracts. They are not reflective of a bullish sentiment in the hog complex.
Yeah, it's a lot of things we'll have to watch there, it seems, on this hog side. And again, with both cattle and hogs, we're moving into the fall. We have to kind of see with the COVID spikes, but we would think moving into that holiday season with, you know, different hams and roasts and things of that nature, just be interesting to see if that has any effect on the market or if things are different this year with COVID obviously playing a factor, Brian.
So many things with this COVID that it's just hard to figure out, and you almost have to just let it play out.
Mhm.
But we talk about school lunch programs and how much, what types of food are we missing, or are we replacing with? What are families eating at home?
Mm-hmm.
Um, things they're just different. Um, one thing we don't see reflective, hog slaughter number 493,000 today. But how many hogs over the last several weeks or months have been purchased privately? I don't know. Cattle privately because of the problems in the supermarket. People want a half a steer on hand or a
Mm-hmm.
quarter. So we may actually have better demand out there than the market is reflecting right now.
Sure. Briefly, the dairy market, we should probably look at that real quick on the milk and butter and cheese side. Any thoughts there?
Yeah, really volatile. Again, you talk about a market that's probably reflective of volatility. The milk market probably gets the blue ribbon. It has just been all over the map. Really good prices. So what's driving it? Well, government programs, cheese buying for lunch et cetera, et cetera. Um, did producers really pare back a lot? I don't know. Hard to say. I think you have to go back. When you look at the dairy industry, I gotta often go back 6 months ago. What was it like? Not 3 months or 2 months ago, because this is a reflection of it. Um, and pretty poor prices, and a lot of very reflective producers who were moving cows out of the herd or not keeping heifers around. So all of a sudden we got these really good front month markets. Been a couple problems for the dairy producer though. One, the front month futures market isn't always reflective of his actual price. So you get that producer price differential. So that's been a little bit of a hard pill to swallow. Um, the second thing is the back months just haven't followed along. So the market's been putting the emphasis on the demand for cheese and products. And now we're here in November, and now there's all this question mark. Are we going to have a lot of Christmas demand or not? Or is it going to be really robust because nobody's going out to eat? So they're going to whoop it up with a, big old Christmas dinner at home with all kinds of cheese fixing. I don't know.
Yeah.
Super Bowl, what does that look like?
Mm-hmm.
Probably no big parties. Um, but suffice it to say, this is kind of our window when actually that pre-buying is probably starting to wane
Mm-hmm.
for the holidays. So a lot of unknowns. But if I'm a dairy producer, most likely you, if you're buying insurance, you bought it already. So now the market's higher. You probably want to look at some kind of an option strategy in milk. Spend the money, buy some puts, put a floor in. These markets are in a volatile window, and they've had a heck of a rally. And a lot of times people say, well, if I buy a put, I feel like I'm throwing money out the window. Well, it feels like that when prices stay high. When they tip over and turn down, then it's the greatest thing since sliced bread. And that's when you really need it, when it looks ugly all of a sudden.
Yeah. Brian, almost out of time. Any final thoughts on the markets, real quick, you want to share?
I think what we've seen this last year is that the market has provided just this sort of what's the right word, trend through uncertain waters. And I'll go back to when I started in my career here. I had a chance to tour the Board of Trade 31 years ago. Got invited to with a group to talk to one of the it's called FCM, Futures Commodity Merchants or clearing firms. One of the vice presidents there, and he's kind of quizzed us all, and anyway, what he was quizzing us about, what do you think's most important, and some said, well, the supply and demand. Some said technicals, this, that, and the other thing. Most of us were going, well, I don't know. We're new to this. I don't know what's important. He said, this is all you really need to know. He said, tomorrow morning at whatever time. So at that time, the grains are opening at 9:30. At 9:30, the market opens and there's opportunity. And that's really all this volatility has provided opportunities. So to tie into that, I look at the dairy market, I look at cattle, I look at all of these markets, corn, soybeans, they've all had some pretty big runs in volatility. That's opportunity. And so it's a matter of not being afraid of it, but embracing it and, spending some time, dusting off your marketing books and what is a put and what is a call and what's a forward all those things. Refresh your memory. We know you're harvesting, you're tired, but take a few minutes. Really critical when the markets move to have a good pre-planned strategy so that you're prepared.
Great advice as always. And if producers want to reach out to you and the folks there at Total Farm Marketing by Stewart-Peterson to get some advice and some help, how can they do that, Bryan?
Well, I think the easiest way, and for me, a 2-minute conversation, 5-minute conversation is probably, we can accomplish more in that than all kinds of emails and this and that. So I'll say first, if you'd like, connect with us, 800-334-9779. So that's our general 800 number, 800-334-9779. And then if you want to talk to me directly, I'm extension 444. So just remember the 3 4s. Otherwise, we've got an awesome website, totalfarmmarketing.com. Take a look at that. We've got lots of resources on there. So we've been around since 1985. We've got decades and decades and decades of people with experience, and really good people who care about farming, who care about your livelihood, who care about your success. It's awesome. It's a passion of ours, but that'd probably be the best way to connect with us. Either give us a call or check on our website.
Sure.
Or they can, if you want to email me, it's Bryan@totalfarmmarketing.com. Pretty simple. And that's with a Y, Bryan.
Yep.
But yeah, we'd love to hear from you and feedback or really just good questions. Ask what's on your mind. If we don't have an answer, we'll find an answer. But as I said, a lot of times the best strategies come out of nothing scripted or pre-planned. It's talking about what's important to the farmer's needs and his goals.
Very, very true. With that, Senior Market Advisor with Total Farm Marketing by Stewart-Peterson, Bryan Doherty. Thank you for being on today's edition of Market Talk, and we'll talk to you next week.
Listen, this is awesome. Thank you for the opportunity, and good luck to you, and good luck to all the farmers finishing up harvest. And please keep it safe and keep your family safe.
Definitely. Bryan, appreciate it. Thanks so much.
Yes, sir.
Bryan Doherty, our guest here on Market Talk today. And that is our program for Monday, November 2nd. Tune in tomorrow afternoon. I'll have Chad Hart from Iowa State University joining me here on the program. You've been listening into Market Talk. I'm your host, Jesse Allen. Have a great afternoon.